Turn now to China. After 3 years, the country is reopening its borders and saying goodbye to its zero-COVID policy. So will this easing and the unleashing of the Chinese consumer help bolster the economy around the world? Let's bring in Leland Miller, CEO of China Beige Book International. Leland, great to have you with us. This is a consumer that has effectively been locked in for a few years now. I mean, we were locked in for a year plus and got unleashed and spent all sorts of money. So how do you think about what this will do to not only Chinese GDP, but also to other countries that rely on China, as trade partners?
Well, they're two potentially very different stories. You've had terrible data, growth data, every other kind of data for 2022. So as COVID-0 has ended and the economy reactivates over the coming months, you're going to see a bounce in everything China. It's a cyclical bounce back. So you're going to see people traveling again, spending again. You'll see investment spending again. You're temporarily, but you'll see consumers jump back at it again. So you're going to see a jump in China. The question is will that have the same effect for the world? And the caution here is that most of China growth has traditionally been output, production, building out of property. These things will not help global growth. It will not help global GDP. So I think the question here is, will the China story be a world story? Traditionally, it has not been.
Leland, hey, it's Tim. I agree with that. In terms of the impact on resources and commodities, because I think China will spend on infrastructure and investment, and we've already seen a move higher in iron ore prices and even copper prices. Can you talk about that impact?
Sure. Look, you're going to see the cyclical bounce back. You're going to see the investment spending. You're probably going to see the consumer spending. And you do have the first attractive window in 3 years to stimulate the economy further, build out infrastructure, help the property sector heal, although not rebound to what it once was. But there's a real question. If you have a bounce back in the economy without the stimulus, we have to be very cautious about assuming that Beijing is just going to dump a bunch of stimulus on top of it. They're not going to need it in, the early parts of the year, the middle parts of the year. So, we have to be very cautious. We see these big numbers in terms of, what they're stimulating, going to stimulate the property sector. They're going to issue all these bonds. They're going to build out infrastructure. But if they don't need it, then we have to be very careful about assuming they're going to do it, particularly earlier in the year.
Leland, we've seen a big bounce in consumer-related stocks like luxury goods, LVMH, et cetera, on the notion that the Chinese consumer will just all of a sudden, go out there and spend all sorts of money. But I'm wondering if you could talk to us about the state of the Chinese consumer, because while we think here about getting lots of stimulus checks, it was different in China. And the fact of the matter is when there were many lockdowns more recently, a lot of Chinese consumers were faced with mortgages that they couldn't pay, properties that they couldn't pay for anymore because they couldn't make their living. They weren't getting any help from the government. So what is the state of that consumer and their actual ability to spend?
Well, the state of the consumer in China is very poor. You had a different type of stimulus in the West. You had, consumers were stimulated, households were stimulated. You didn't have that in China. It was all going to the supply side. So, you've had a problem with consumption falling for several years. And the government's promised that there's going to be this shift from investment to consumption. It's never happened. It doesn't look like it's happening. Now, you will have this cyclical bounce back. So there is the potential that you can have what we probably call a head fake in 2023, where consumers get back into it for 2, 3, maybe even 4 quarters and start spending. They're certainly going to be traveling. And so the question is, as the consumption numbers go up, does this reflect anything more than, a 3, 4 quarter at most bounce? The answer is probably not. You still have the cyclical bounce back framed in the context of a long-term structural slowdown. So you have to be very careful about that head fake in 2023.
All right. Leland, thanks so much for your time. Appreciate it.
Pleasure.
Carter, how do you think we should think about a head fake if it is? I mean, especially if we've seen the stocks jump in advance at this point.
I mean, that's the thing. The stock market, in principle, as we all know, it's a cliche, is ahead of the facts. So I just fall back on this. Everything I see, and this is just spending hours looking at charts, but the chart ultimately is a weighing mechanism, right? It reflects all the fundamentals, and it's where the money's changing hands. There's nothing that I see. For instance, we were talking about banks. Banks are up more in the market, but Citi isn't. It's because JP Morgan is dominating the index. There's so many ways to slice the data, make it look better or worse. I just don't see the thesis for being really bullish.
But a chart in the short term and in the medium term even, I think, can be a voting machine as much as you think it's a weighing machine.
Yeah. Sure.
And I look at China and I look at the K-Web, and that looks like a V-shaped bottom to me.
It is.
And I think it's something that actually can go higher. And I'm not sure it really is people weighing all the fundamentals right now. I just think it was thrown out the window for a lot of different other reasons.
Yeah.
Right. Well, yeah, it's steep now, right? It's all about your time frames, right? You're talking about the K-Web being up 100%. At this point, I think you fade it.
Capri.
Yeah, I think
mention Capri.
You have to go high end in the retail space, or you have to go with who benefits the most, the TJ Maxx or a Ross Stores, all that extra inventory.
As it relates to China.
But I would go Capri, I would go Ralph Lauren, go high end retail, because all of that money is getting back into the market and it needs to be spent. But I agree with Tim. I think everything China related can bounce further because it's been stifled. It's like a balloon underwater.